Hey everyone, this is your European Open briefing for Wednesday, October the 12th. I am Rafi Bahajian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So the main developments this morning, we have the dollar coming off yesterday's 7-month highs. This is partially due to sterling's rebound, which is sterling has been recovering against all major pairs, and this is has been putting some pressure on the dollar this morning. The pound fell quite a bit yesterday, it dropped below $1.21. It's since recovered to around $1.23. The main trigger for this rebound was reports on Bloomberg that the British Prime Minister Theresa May is now decided to let Parliament to vote on the terms of the Brexit, and this has pleased the markets because it means that there's less chance of the UK going for a much harder Brexit, if you like. So it's likely that Parliament will push for closer ties with the EU. In other news, we've had some comments from the Bank of Japan's Governor Haruhiko Kuroda, hinting at a less proactive policy easing. We also had some Japanese data where machinery orders fell by less than expected, which was good news for the Japanese economy. So let's have a look at the dollar index. We can see here that it peaked at a 7-month high of 97.76 yesterday. This was the highest since March, and this is mainly, we can see the rally since the beginning of the month, mainly on the back of growing expectations that the US Fed will raise interest rates in December. We did have some dovish remarks from Minneapolis Fed President Neil Kashkari. He was actually quite cautious. He said that the Fed should let the economy keep creating jobs as long as it's not creating inflation. Other Fed officials have been much more hawkish in recent weeks, so it does point to the fact that we still have some divisions within the FOMC as to how quickly rates should be going up. And this puts the FOMC minutes for the September meeting in focus. They're due out later in the US, and obviously markets will be scrutinizing to see whether or not there are any hints there of a December rate hike. Let's have a look at the dollar against the yen. Yesterday, the dollar touched 104 yen. It's since settled around 103.50 yen. There was much impact from comments from Bank of Japan officials and also from the machinery orders. The core machinery orders in Japan fell by less than expected in August. So on a year-on-year basis, they were up 11.6%. This was quite an improvement on 5.2% in July, and it does suggest that we do have a pickup in capital expenditure in Japan, which is a good news for GDP. Bank of Japan's Governor Haruhiko Kuroda was speaking in Parliament yesterday before the lower house budget committee. He did say that the bank will not proactively ease policy to achieve 2% inflation. This means that what he was basically trying to say is that they will limit future action to sort of bigger shocks. So in the event that there are further economic shocks in the future, or we see a sharp jump in the value of the yen, only in those more extreme cases the bank will likely act in the future. So for now they will be focusing on steepening the yield curve for long-term Japanese government bonds. We also had some additional comments from another Bank of Japan board member, Yutaka Harada. He quite strongly signaled that the bank is unlikely to take any action at the bank's next meeting in end of October, beginning of November. But of course, the yen's main moves are mostly dollar-driven, and so as long as we've got those Fed rate hike expectations, we should see the yen continue to depreciate over the coming weeks. Now, looking at the pound more closely, we can see yesterday we had a sharp slide. The pound hit 1.2086. This was the lowest since last week's flash crash. It rebounded quite sharply to back about $1.23. It went below the $23 level. Now it's gone back up again a few minutes ago. The rebound came on the back of reports in Bloomberg that the British Prime Minister has now decided to go ahead and give Parliament more of a say in terms of on what terms Britain will leave the EU. Prior to that, she had insisted that Parliament will not have a say on the Brexit plans because the British Prime Minister is concerned about making known the British government's plans to the European leaders, because that would weaken the British government's hands on the negotiating table. But because of ongoing pressure by MPs, she has now considered and will likely let Parliament vote on the final deal. Looking at the euro, we haven't seen any rebound in the euro though, despite the dollar coming off its highs yesterday. The euro continues to slide downwards. It hit a 2.5 month low of 1.1031 just ahead of the European Open. One thing to watch out for the euro later in the day are the Eurozone industrial production numbers. But other than that, the main focus will be next week's inflation data. Another currency rebounding today is the Australian dollar. Now both the Australian and the New Zealand dollars fell sharply yesterday, mainly as a result of the stronger dollar. We can see here in the chart that we've got a much bigger rebound in the Aussie, although the Kiwi has rebounded. It's a much weaker rebound. Helping the Aussie today was some reports that due to the recent surge in coal prices, this should provide a bit of a boost to the Australian economy. The Kiwi, on the other hand, is, of course, we know that we'll likely get another rate cut before the end of the year, so that's limiting the Kiwi's gains. Also, another reason for the Aussie rebounding so strongly this morning is partly due to the fact that the Aussie sell-off might have been overextended because we do have a changing picture in Australia, the fact that the RBA is not likely to cut rates again, so that should support the Australian dollar over the coming months. So let's have a look at today's calendar. We can see here Japan's machinery orders coming in much better than expected. We had some French inflation data which were more or less in line with expectations. Eurozone industrial production numbers are out shortly. They're expected to bounce back by 1.5% month on month in August. But apart from that, the only other main data are the JOLTS job openings out of the US. They're expected to come in at 5.7 million versus 5.87 million the prior month. That's it from today. Thank you very much for watching. Have a great day.